Barloworld. It offers customers solutions in the automotive, handling and logistics fields. The group is currently in negotiations to acquire Bucyrus distribution businesses in Barloworld's Southern African cat dealership territories. Barloworld has a market cap of 19 billion rand and a price to earnings ratio of 17, so slightly more expensive than Bidvest. Let's take a step back and look what happened to the share price in a few weeks ago, because you had Barloworld coming out saying that they've sold their US materials handling business, and then that share price rallied, and then that really set it up for a nasty fall, coming out of the trading update saying that earnings will be 65 to 75% higher for H1. Share price fell by 7.8% on the first trading day after that, and then a further 3.7%. Why were investors so disappointed with such strong earnings numbers?
I think, look, it had been pushed over since September, October last year, from where was it, 58 Rand all the way up to 100 Rand. Wow, that's really motoring. I think it got overbought. There was too much anticipation of how good infrastructure development could be, and just look how we slowed down from that respect. We're promised there will be infrastructure development where they will have a huge benefit with big yellow equipment. That's their speciality, but it hasn't happened, and I think that that's part of it. It's too much. Yes, they're going to benefit, not only in South Africa, but for infrastructure development in Africa as a whole over time. And I think that it was a question of buy on the rumor of things to happen, sell on the fact. We haven't even seen any of the facts yet. So it's come back. It needs a consolidation. It was going too high, too far, too fast.
Okay, Eugene, what are your thoughts on Bidvest? And just reading some of these, Barloworld, what's wrong with me tonight between Bidvest and Barloworld? Reading some of this commentary on Barloworld, basically some saying that it's pretty much a commodity love-hate story. If you're buying into the commodity story and you're buying into the resources rally that we're going to see further down the line long term, then Bidvest, Barloworld cheapest is the one you want to buy. What are your thoughts on that?
Okay, if you look at Barloworld, the exposure is obviously on the mining side in supplying stock for them. It's a geared play to the mining, although they've got a very broad footprint on the vehicle retail side. I agree, this stock was hyped up to $100. It was way overbought. It was excessively expensive there. I think it came down aggressively, which is good. We like it at these levels. I think it's reasonably priced. I would accumulate. I won't buy aggressively but I think the growth story here is very positive. It depends on your macro outlook. I think this is kind of company that you've got to look at the broad macro picture. Maybe Bidvest is a similar story, that you've got to look at the European theme, but here you've got to look at the Asian European theme and take a view on things like not just commodity prices per se, but the effect of that on our currency, on our local economy, and then also on interest rates, because this thing is highly geared to interest rates on the domestic vehicle side.
What are your thoughts on that comment there? Because interest rates are very low right now. We know that we haven't seen interest rates at this level for some time. The view right now is that interest rates are going to stay where they are for even up to next year, September. So what does that mean for Barlow's earnings?
I think it's a positive factor, and I think that they are quite highly geared also to the motor industry, whether it's production or sales or leasing or finance. It's all a logistics play. It's one of those where I think that if the economy gains some momentum, so would they.
So another GDP play here, basically.
Just a little bit better than that, because they, again, also have good management. But if we go say, what do we do with it? There's got to be a space between a buy and a sell for a hold, and I think that's where it comes.
Before we get into that, let's look at this Bucyrus possible deal that they have, Eugene, because that was just announced today. And it's an interesting commentary coming through from the company saying that it's a really good long-term opportunity. They won't put a number on it and what it means further down in terms of cash flow, in terms of earnings coming through from that. But basically saying it will give them an opportunity to enter into Siberia's mining operations, specifically there, the coal assets. And overall, though, you're looking at a tie-up there that they say is going to have a material impact on the company. So what did you take from that news?
Well, I think the news sounds positive, but it all boils down to what do they pay for the assets. if they get the assets at the right prices in this kind of environment. So one would expect that when you sell off assets in these kind of environments, that your pricing is attractive. So if they get it at the right price and it can generate the cash, then I think it's great. It gives them a broader footprint, it gives them new growth opportunities, and maybe that's one of the local domestic problems that they have with some of the other big industrial companies, is that they're very tight and dominating in the domestic market. Where do you expand into? Where do you grow? So I think you start exploring environments like that in especially those emerging markets. It's very attractive.
Let's get into it then. Hot or not at the price it's trading at right now. It's sitting with a very muted year-to-date gain.
No, we'll buy it around the 85 level. I think I would prefer to see it around the 80 level. But the lower it gets, the more exciting I will get. It's not cheap. One's got to acknowledge it's not cheap. And I think what Ian said earlier is that the market in general is really not cheap. We see the market as averagely priced, getting maybe a little bit below average. But out of the universe, this is the stock that we would prefer now.
Okay, so I'm guessing that's a hot then. Hot or not for you, Barloworld?
That's a hot.
Yeah.
You know, I'm just looking at a PE of about 17. Compare it to Bidvest, which I think is around 13. Would I buy Barlow's at 17 when there was an alternative in a different field altogether, I must say? And I'd say, no, it's a hold, but I would probably not be a buyer right now.
It's a hold, but not a buy at the moment.